Good morning, folks, and welcome to the pre-market insight from March 19th, 2020. We're retesting the lows. Let's take a look at the charts. We're taking a look at the S&P 500 futures, and we're currently coming in just about down 2.63% or 63 points. However, it's so important. Yesterday, I made a post on one of my social media platforms detailing the fact that your calm mind is the ultimate weapon that you have when you are facing challenging circumstances. And whilst this may attract headlines of we're down 60 points, futures plunge, the market is going to open down big, those sorts of headlines may cause you to be anxious, to be nervous, to be unsettled. But if you understand price structure and the story that price tells, then this sort of action is actually very encouraging because you understand that a bottom is not a day. A bottom is a process. A process between buyers and sellers coming to a point of imbalance where buyers are more aggressive than sellers at a certain price level that causes price to then begin to appreciate. If you are looking for a bottom or you're hopeful for a bottom, then actually what you want to have happen is prices come down to touch lower levels to see whether buyers are then going to show up there and overwhelm sellers in their aggression. So this price action that we have here this morning is actually, from a bullish perspective, very encouraging. We do have signs that we need to look for that may indicate that sellers will overwhelm bulls here at these levels, certain nuances that I will point out, but thus far this is definitely the type of price action that you want to see. So let's examine a bit more what I mean by that. In yesterday's pre-market video, we began talking about the fact that we are in a very clearly defined range. If you look to my left, where the gray rectangular box is shaded, you can see that price has come up to test this just about 25.50 level. It has gone down to test this 23.50 or so level and then continue to bounce around within that range. That all changed yesterday because we began talking about the fact that seeing that we are price range bound, where would we break? Would we continue to bounce around with that range? Would we break to the upside? Would we break to the downside? And in this case, when we speak about break, we're talking about price beginning to trend and or participate in the price discovery process of seeking buyers and sellers on different time frames. So we broke initially to the downside, making a low all the way down here at 22.62. This line that we have here is an important level going all the way back to December 2018. As you can see here, we highlighted it in yesterday's video. December 2018 low. A lot of talking heads, those who understand price structure, technicians, and market participants alike would have probably been anticipating at least a touch or retest of this level, and now that level has now been touched, taken out, and we reversed as of yesterday's close. However, we made a low of 22.62 and we closed at around, I believe, 23. Let's take a look at that. We had a close at around 24.05, you can call it 24.05. And since then, in the overnight session, we've just sold off. But look where we've sold off into, or beginning to base into. We have a very clear line here at this 23.50 low. I would call it a line in the sand going forward to judge the aggression of the price action, to judge the imbalance of the strength of the aggression between buyers and sellers. If we can continue to build some value, build some price agreement at this 2350 level, that may prepare us for a bounce and a further test and break of all these prior levels to the upside. The yesterday's close at around 2400 that we spoke about. Then you have the 2455 level above. We then have the 2526 and the prominent 2555 to get out of this range that we've been in for the past couple of days. Now, keep it simple, smarty. Anything is possible, but not all things are probable. And so, to the downside, 2352 is also a very important level. If we begin to build value, or as we currently are in the pre-market, we stayed above 2352 for quite some time, but now we seem to be breaking down, then absolutely there's nothing preventing us from retesting these lows here at around 2291, this small level of consolidation in between here. There's nothing preventing us from testing there, and that may be a buying opportunity, i.e. you can use that level to lean against it. If we come down to that level and we hold, then you can possibly lean against that level long and or possibly look to initiate shorts beneath. However, that is not consistent with my type of process and trading strategy. I like to short from highs to lows versus shorting or initiating shorts at lows. So I would not be shorting here, particularly because we've had such an extended period of downside. We have had this bullish price action reversal yesterday evening after having tested that 2316 low from December 2018. So actually on the short side, I would actually be waiting for higher levels before I go short, because this is very much shorting into the hole, in my opinion. Remember, one man's buy can be another man's sell, so always do your due diligence. Everyone's account size, risk tolerance, time frame, and investment objective is different. So you may hear a lot of calls being made, even me giving you the core principles and the understanding of how to make decisions. But even so, what I would like even more is for you to my goal, my aim is to develop your critical thinking skills when it comes to interacting with the market and extracting value from it. So please use these tools, use these thought frameworks in your own process, adapt it, add to it, take away from it, to find a process that you can work with reflexively, so that when it comes to interacting with the market, it is almost effortless in terms of knowing what to do and when to do it, and exactly what tools and how to implement and to execute. Keep it simple, smarty. Be safe out there today, guys.